Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial updates. And like it has been a fad lately, everyone in the financial market is talking about inflation and the rate hikes and the tightening. Unfortunately, it needs to be covered that these updates are still influencing the financial markets. So we'll have a different beginning as we'd say the oil prices have begun moving up again, majorly on the backdrop of another political crisis, this time Libya and Ecuador. So, the tensions on the oil front keeps propping up from different regions, and now it needs to be seen how OPEC would be answering to the supposed shortages in supply. Whereas on the inflation front, we've been hearing a lot of economists saying larger rate hikes would be crimping the already weak demand without much softening of the inflation. So, Pankaj, what do you think? How should one be operating out of the markets, and what are the updates for the financial markets today?
Thanks, Shikhar. There are lots of news surrounding oil. One of the news you have already highlighted. Other than that, is basically U.S. crude inventory in SPR, Strategic Petroleum Reserves, fell to the lowest in 1986. There is another news that oil prices moved higher after UAE mentioned that it does not have a spare capacity to pump more. And Iran officials are reportedly traveling to Qatar on Tuesday to hold indirect talks with the United States for reviving 2015 nuclear deals. All these on the background that we are anyway seeing many meetings to find out solution for Russia-Ukraine conflict. There's a G7 meeting going in Germany. The central bankers are meeting at a ECB forum on central banking in Portugal, and there's a NATO summit going in Spain. All these are basically all these meetings and deliberations and outcome of these summits are significant in context of a current geopolitical and global economic situation. There would be matters which will be discussed about monetary policies, inflation, oil prices, and how the Russia-Ukraine conflict can be completed or maybe over. There's another side. Russia has defaulted on its foreign currency sovereign debt for the first time in a century. Although the default was not because of there was no money available with Russia, because of sanctions are going on the Russia is the main reason they could not make a swift payment. Russia has pushed back against the default designation, saying it has been forced into non-payment. Yesterday, risk assets took some breather. Last week, they were doing pretty well. This time now, people are discussing where will be the peak inflation, what will be the likely monetary policy response, and there would be few quarter-end adjustment would also be going on. So all those basically will keep our risk assets in a slightly range movement for the next couple of days. Now, US dollar struggled yesterday versus major rival as a softening inflation expectation in US prompted a reassessment of the prospects of aggressive interest rate hike. But all these looks like as of now corrective moves. India 10-year G-Sec yield is dealing at 740. And I believe that there's a major resistance at 735, which is a pivot for the entire G-Sec movement. And it's likely to head back to 745 during this 2-3 days. And the major reason can be again a higher crude oil prices. Yesterday, we saw another kind of a market movement. Despite of all positive factors for rupee, there was a demand for dollar against rupee was significant. And we saw that there's a strong month-end demand came in. And post-market hour closure, basically what means is the OTC market where the over-the-counter people can deal in dollar rupee. After their closure, there's a demand persisted and it almost touched 78.50 resistance area in the exchange market. Though we have not seen any fresh negatives in the market. Now we are at a quarter end and there would be a flow dominating time where the buy side would be a predominant from the importers, from the interest payment guys and all. And we have also observed in last few quarters, there's a large exporters sell at the end of the quarter, and particularly by the IT companies, and which might lead into a range of a 78 and 78.60 for the next couple of days. That's all from me. Thank you.
All right, Pankaj, I do see a change in range for the dollar rupee pair from your side, and we are expecting a higher range on 78.10 to 78.60, like you've mentioned. Interestingly, the quarter end selling that you have mentioned can cap any upticks or any deficit related buying with respect to oil prices moving higher and inflation continuing to be higher. So folks, markets have been a bit whimsical when it comes to the actions and the whole host of political or geopolitical tensions going on along with inflations and the central bank actions. We hope that you guys continue to manage risk. We are still available in case you need someone to manage your risk. Till then, we take goodbye and we catch up again tomorrow morning. That's it for today. Thank you.